Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Wednesday, September the 21st, 2011. Well, a change of trend today, and we see that we have a candle that's made a lower high and a lower low. Previous days trading, we had a change of trend to the upside, but that change of trend to the upside was not supported by the bulls. We actually had the bears closing in control. Day before that, we had a change of trend to the downside, so we're having the trend change every day at the moment. Today's trading, however, was quite a decisive trading day, a very, very large red-bodied candle, signalling the sellers closing with control and the sellers making very solid net bearish progress on the day between the open and the close, a very, very bearish candle. And if we look back, we can see that on the previous three downswings or four downswings, we can see that we've had very large red-bodied candles initiating these moves. These moves tend to peter out, though, when we interact with the support down around the 1133 and certainly down around 1106, but especially 1133 and 1150 regions are potentially very strong support for this market. So it wouldn't surprise to see this market find support within this large region over the next day or two. Now, in Ichimoku charts terms, we can see that the market actually found resistance at the cloud, and we highlighted this some time ago, that the cloud was actually moving down to meet the price action, and that we would potentially have trouble trading up through this area. We can see that we tested on 1, 2, 3, 4 occasions where the market has traded to just within the cloud, and the market sold off. The sellers have come back into this market. Previous few days, we also found resistance at 1219, which was a previous area of support and resistance, so that coincides with an area within the cloud. Now, the market is trading below the cloud, and it's been some time since we've been trading above, so the market has an overall negative bias, and we're also now trading down below the Kijun Sen and the Tenkan Sen, which means that the market is bearish in the medium-term and fast-term time frames. Previous to this, the market had broken out up above the Kijun Sen and then the Tenkan Sen, and gave us a bullish outlook on this market for a few days, for roughly a part of a week, until we started to trade to an area near the cloud, and that's where we're seeing the selling pressure come back to this market. Just looking at the Kijun Sen, the pink line here, that's turned flat, and quite often when that turns flat, price action is attracted back towards there, and that's exactly what's happened in this case. The Kijun Sen represents equilibrium in the medium-term time frame, and the market is trying to find that equilibrium at the moment. We know that markets move from periods of disequilibrium back to equilibrium, so we could see the market move to disequilibrium again if we do trade to the downside, and if that indicator stays flat, then there is potential for us to trade back up to that region, but we're not trying to preempt the market. So obviously a fairly bearish market in all three time frames. We do, however, have very strong support down below, extending especially down to 1133, but then even down to 1106 if we do end up trading down there. Alright, moving on very quickly, we'll just take a quick look at oil, and here we can see that we have a spinning top type candle. This candle has a higher high but a lower low, so in bar chart terms it's an outside bar, which is a bar of indecision. Previously we had an inside bar, another bar of indecision, and then the market trending down prior to that. So the downtrend in this market is still in force because we haven't had the opposite configuration of highs and lows. Now, spinning top type candles are also candles of indecision, and that's because we have a small body and we have a shadow on the top and the bottom. And the shadow on the top represents downside price rejection, and obviously we've seen rejection from this market when it was trading within the cloud, and that's what's happened on quite a few occasions here. The market's been rejected at the cloud. But by the same token, we have the shadow on the bottom, and that's upside price rejection, and this area at 85 is a very important level of support for this market. It's been tested on quite a few occasions, and just in the recent past on 1, roughly 2, 3, 4, 5, and now the 6th time. So that's a very, very strong level of support. That's actually at 85.11, but we also have the Kijun Sen trading there at 84.95. So that region around 85 is very, very strong. We have strong support down below there at 84, extending down to roughly about 83, and then down to 79 and 80. So very, very strong support below. Very strong resistance overhead, however, from the cloud, so we do need to be aware of that, and certainly 90 is a very big area of resistance for this market. Now, in Ichimoku charts terms, the market is technically just bearish because we're trading below the cloud, although we're very close to the cloud, so we're almost neutral. So big picture terms, the market is technically bearish, but really quite neutral. In the medium-term time frame, the market remains bullish, but only just because we're just trading up above the Kijun-sen, and that Kijun-sen has been flat for quite some time, and we can see that the price action was attracted back towards there. With the Tenkan-sen, the green line here, the market is trading just below there, so we have a bearish market in the short-term time frame, and this market's been bearish in the short-term time frame for the past 3 days. So that's an area of resistance and an important area for us to break out above of if we are going to see the market turn bullish, although there aren't any clues that that's going to happen. So we have a market that's in some sort of a very large congestion area here, bounded by strong resistance overhead, but very strong support down below.